Now, Barclays is expected to sell off much more of its stake in its African subsidiary in the weeks ahead. This is all part of a bid to take its holding in the business to well under 50%. The Barclays CEO decided in March to scale down the lender's operations in Africa, as the bank's 62% stake basically meant it had to fully allocate capital to the entire business. The May sale went fairly smoothly. In fact, bankers said there was quite a bit of strong demand. The book at the time was 3.5 times oversubscribed. Let's dig deep into the details of what happens next. Richard Bestick is live in London right now. He's got more data on this story. Richard, the last share sale, as I mentioned, significantly oversubscribed. Which companies were interested at the time? And in a post-Brexit world, is that interest still there?
Well, the companies that are interested are those pension holding companies. It's the big institutions that have a particular attraction for Barclays, and they sold well. As you were saying there, Rama, the last share issue was 3.5 times oversubscribed, so that's not a bad omen for the next tranche of shares to be offered for sale. The bank's CEO, Jess Staley, says he's detected a strong level of interest, and in his words, he's very confident the next round will go well. However, if you examine his words carefully, it would seem he's not going to be rushing into the marketplace quickly. He's giving the bank time because he says it's complicated. There'll be detailed negotiations over the operational agreement between the two banks when Barclays is no longer a controlling shareholder. And it's also true, Rama, that the Barclays share price isn't particularly high at the moment, despite Friday's rise. So in reality, we're probably looking at the autumn before anything happens.
Indeed. We've also seen a steep fall in profits across the board for quite a few of the bank's operations, more so in Africa, for example. Pre-tax profits in the first half of the year down 15%. How much of that is directly attributable just to currency volatility?
Well, some of it and some of it not. Barclays profits, as you say, did dive in the first half of this year, and the cost of restructuring has started to impact on those profits. The historic mis-selling of personal protection insurance returned to haunt them again with another $550 million bill. It gets worse though, Rama, because analysts here in London say it could be the beginning of the end. Have a listen to the words of Justin Urquhart-Stewart, a co-founder of Seven Investment Management. He says Barclays might not even exist in 10 years from now.
It's going to be very difficult for Barclays. What was a huge global operation has now shrunk dramatically. And now, of course, they're selling off all the key elements. Barclays Africa will go. It was a very profitable, very successful part of the international business, the old BBI and Barclays DCO. The European business is effectively already gone. Therefore, you're going to end up with two key areas. You're going to have the Barclays domestic bank, both retail and corporate, and you're going to have the investment bank. And I wouldn't be at all surprised if in the next few years those two get fully separated out and probably one gets sold off. So Barclays domestically joins up with another domestic bank. And you have the Barclays Investment Bank, primarily based in America, which in due course no doubt gets purchased by one of the large American operators.
We could be seeing the end.
This could be the end of a great history of this global eagle now shrinking back to a rather tattered nest in London.
Finally, Richard, of course, the bank CEO also arguing that the Brexit vote will have absolutely no effect on the bank's turnaround plan. But does the market share that view? How resilient can this bank be amidst all this post-Brexit turmoil?
Well, there's no conversation, including the economy or finance, that's complete without the word Brexit, Rama. The reality is that Brexit impacts on just about everything here. Barclays has already warned of a Brexit impact if Britain loses what are called passporting rights. Now, these so-called passporting rights allow the City of London, the financial district here in the capital, to move money across the European Union unfettered. Now, if Britain loses those rights as part of Brexit, then Barclays, and indeed all Britain's financial institutions, will struggle. Barclays has already warned that the UK's decision to quit the European Union has increased the risk of recession and could seriously damage the bank's business. We wait to hear from Bank of England Governor Mark Carney on Thursday for what he thinks should be done. Interest rate cuts? Perhaps. Quantitative easing? It's on the cards. We'll see Thursday.
Indeed. Should be a fairly interesting speech that we're going to be waiting for from Mr. Carney. Thank you for that. That's Richard Bestick live in London.